So guys, we are going to be trading Boom 500. We are going to analyze Boom 500 together now. Yeah, it's King Surface again. So we are here again to show our analysis. So we are going to do a live trading here, a live trading session. We are going to do live analysis here together. So this is Boom 500 guys. Let's start the analysis from the higher time frame, which is a top-down analysis that we're going to do. So if you are new to this our YouTube channel, don't forget to like, subscribe to our channel, and if you want to be in our Telegram channel, you're not there before, you can DM. If you don't know how to, and if you don't know how to join it, then you can check the link on our bio to see how, or all the links that we have. You can check the links on our bio to do whatever you want to do with us. And don't forget to comment. If you like the video, give us a comment and a thumbs up. And if you don't like it too, still give us a comment. We want to know your feedback. So thank you. Now let's move on. We are going to start from the, let's go to the weekly time frame. Okay. Now, or let's go to the monthly time frame. So we're going to start from higher this thing. Now, from the monthly time frame, we can see price has been going up. Like price has been going up from down before. So as price was going up from down, price got to this zone. This zone is a monthly OB. So price hit the monthly OB, which is this side. I'm going to mark it out now for us to see. Price hit the monthly OB. As price hit this monthly OB, so we expect price to move down from that side to come down in, because after the monthly OB, what we can see is we can see a fair value gap. We can see a fair value gap. We can see an imbalance from the monthly. So we expect price to come back in and fill this imbalance. So after price fill the imbalance, like this, price filling the imbalance before it starts going up to the next order block, or probably price might just break out this place and start and move to the next order block before coming down. So that is what we are seeing on the monthly time frame. So on the monthly, we want price to come down and fill in the imbalance. Let's go to the weekly. So on the monthly, we have seen the probability of price coming down now. So on the weekly, you can see the weekly order block is in line with the monthly order block that we see. So this is the weekly order block. Now, just because I'm using phone, that's why it's not that easy, but I'm going to try as much as possible. So you can see the weekly order block is also in line with the monthly order block. So now price hits the monthly order block, likewise the weekly order block, and started moving down. So from there we can see that price is moving down. So now let's close this so that we can understand. Now on the weekly, what did we see? We see that price moved down. Price moved down and went back up to do immediate rebalance. So price, there was imbalance here before, so price went back up to come back up, because when this daily candle closed, in red, so price went back up to rebalance this immediately. So that's immediate rebalance. So after the immediate rebalance, we expect price to move down again after that side. So we're expecting price to move down after this rebalance. We expect price to move down, maybe come down into this zone, or still fill in all these zones. So that's what we are expecting. So from there, this is the weekly time frame. We have seen a weekly rebalance. So now let's go to the daily time frame. So from the daily time frame, now see what we saw on the daily time frame. Here, price did a break of structure. That is still in the weekly and the monthly order block. So price did a break of structure here. After this break of structure, we can see price moved down and formed a double touch here, which can serve as a liquidity. So we have liquidity resting here. So as liquidity is resting here, then price started ranging inside that place. So price came down to this place, forming liquidities here. Now price went back and come down. So as price came back up, now let me show you clearly what price did on the 4-hour time frame. So as price touched that liquidity zone, came back up. So what did price do? Price gave us a break of structure here. After the break of structure, price went up again and hit the 4-hour mitigation block. So on the 4-hour mitigation block, then price started moving down. After price hit the 4-hour mitigation block, it moved down again. So after moving down, see what price did again. Then price gave us a wipe here. price wiped this low. As price wiped the low, then it moved up again. So price wiped this place, wipe, then moved up again and hit the 4-hour bearish OB. So price hit the 4-hour bearish OB and reacted to it. So on the bearish OB, let me mark out the bearish OB for us to see. This is the bearish OB. So on this bearish OB, we can see price hit the bearish OB, price hit the bearish OB and started moving down. So as price was moving down, we have imbalance here, imbalance here. We have imbalance here. Price filled the imbalance. Like this is the imbalance. So this imbalance, price filled the imbalance and started moving up again. After moving up, this is one thing I want you guys to understand again. Now, price filled this imbalance and reacted to the imbalance, went up. Don't forget, we can see another OB here. We can see another bearish OB here. That's another bearish OB. So we are going to make use of this bearish OB now. This is the 4-hour bearish OB. So we expect price to move down from here. This is it. We expect price to move down from here and clear out this liquidity here, because price already wiped here, still serve as liquidity. So we expect price to move down from that side to come and clear out the liquidity here. So this is what we are expecting, guys. So this is what we are expecting. This is what we are expecting. We expect price to come down from that zone and come down to this side. So this is what we're expecting on this one. We're expecting this. We're expecting a sell like this on this place. Now let's go to the 4-hour time frame. Now I mean the 1-hour time frame, so that we can understand what we are seeing. Now on the 1-hour time frame, what did we see? We saw price did sort of a break of structure. Price did a break of structure here. After the break of structure, price went up. Price went up and hit the 1-hour OB here. So as price hit the 1-hour OB, which is in line with the 4-hour OB, price hit the 1-hour OB here and started moving down. So after moving down, price then gave us a raid. Price raided this place, moved down and came back up into the 4-hour OB that we mark out here. Price raided this place, break it out, then came back into the 4-hour. This is the 4-hour OB. So price came back into the 4-hour OB, and after the 4-hour OB, what did we see again? Now price moved down and is back into it. So what I'm seeing here is, before we can pick a trade, we need to understand that there are some confluence in this place, and in this confluence, what are we seeing here? We have imbalance here. We have imbalance here that needs to be filled. This imbalance. Let me clean this here. So we have imbalance here. We have imbalance. So I'm expecting price to shoot up into this imbalance. That is, price should rate this liquidity here, because liquidity is already resting. Let's go to the lower time frame to understand. This is 1-hour time frame. Now we want price to break out, wipe out this liquidity here. Price should wipe out this liquidity and use that one to fill in this fair value gap. So as price fill in the fair value gap, then we expect sell from there. So that is what we are expecting, guys. That's what we're expecting. Now let's go to the 30-minute time frame. Now as you can see, guys, for what I put on in the 1-hour time frame, we can see price could go up like this, come back into this zone, fill in the fair value gap before moving down. So that is what I'm expecting. So that's what I'm expecting, guys. So we are expecting it to come like that, fill in the fair value gap, or probably still hit this other block here, come here, fill in this place, probably hit this other block and start moving down. So this is what we are looking at here. So on this one, I'm going to do it like this. Price might start coming down from here. So I'm going to do it like this. So here now I'm going to do it like this, guys. So this is what I want to do. So from here, we can look for how we enter our trade from there. So this is the 30 minutes, and let's go to the 15 minutes to see it clearly. So yeah. So what we're going to do now is we're going to place our sell limit on that zone. So placing our sell limit is going to be something like this. So I'm going to place the sell limit now. Now let me place the sell limits. So I'm going to change it to 0.5. Now, okay, I'm going to place the sell limit here. That's at the end of the fair value gap, which is the beginning of the mitigation block. Now, I'm going to place the sell limit here, and let's see what price will do. So we're going to place the sell limit here, guys. So guys, I've placed my sell limit orders. So that is what we are expecting. We're expecting price to move down to that zone and start selling from there. So we're expecting the price to move down from there and start selling. So that is it. That's it. So it's okay here. Okay, so that's what we're expecting, guys. So let's watch out for what happens after. Let's watch out for the after results. So guys, this is the result after. So I saw as price was moving up, I saw price entered into the fair value gap, and we saw that price did not reach our order. So that's why I quickly placed my order. I quickly place a sell as a market execution on that place. So right now I'm going to do, as you can see, price is already selling and it has been selling, and I dropped the signal in our Telegram channel. So right now we're going to delete these ones like that. We're going to delete all these ones. We're going to delete all these ones. So as we delete all this one, I'm seeing another entry. It's time for us to, we can open another position from here right now. So this is it. As we are seeing it, we are going to open another position from here. Yeah. So we are moving on this. So now let's analyze it again so that we can understand why I want to open another position. This is the 50-minute time frame now. So for us to open another one, price did a wipe here. Price did a wipe here, and price went down. Price went down again and break structure here. As price broke structure here, price now move up again and hit this other block here. So as price hit this other block, so from this other block here, we are supposed to be selling from here. So right now I'm going to place a sell here. So I've already placed another sell here. I've placed another sell here now because I see that price came back into this other block. So that's why I place my sell here. That's why I place my sell. That's why I place my sell. So that is how we are going to leave it to run. So guys, let's see how the market come out to play after this again. So don't forget, this is where we are going to. We are going down to, we want to sell it down to this level. We want to sell it down like this. So we are going down to this zone. So once we get to this zone or get to this other block, we might be trying to close our trade from there. So that is it, guys. That's what we are looking at. So let's wait for after. Let's wait to see what price does after this. Let's wait to see what price does after this. So thank you, guys. Thank you. After we take the second trade, this is the outcome. You can see it's been selling. So we are waiting to see if it goes to a place we can have good profit and close our trade. Currently we are running about 40 something pips in profit. So right now we are okay with this, but I'm still going to hold those positions and let's see what comes out again. Let's see after again. So guys, we have made about 60 pips here, so I'm going to close the trade now on the 60 pips. So everything now is set. I'm okay with this now. So now I'm going to close everything on board 500 now, then we move to the lens signal.